Wipro margins exceed street expectations even as dollar revenue and rupee revenue miss estimates. The tech major posts a weak revenue guidance for the fourth quarter. My colleague Reema is here with more.
Thanks so much for that. So on the whole, it's a subdued performance by Wipro on two counts. One, the Q3 revenues have come in lower than street expectations. The company has reported a constant currency revenue growth of 0.6%. This compares with estimates of nearly 1%. And typically, Wipro would report growth numbers in the middle of their guided band. But this time, the top line growth of 0.6% in constant currency terms is at the lower end of their guided band of 0.5% to 2%. So in a nutshell, what I'm trying to say is that Wipro has missed the mark on the top line. So Q3 revenues are a miss. When it comes to margins, there is a big outperformance this time. Margins have expanded by 115 basis points to come in at 16.3%. Now, this comes as a surprise because, for one, there was a 2-month impact of the wage hikes which kick in the December quarter. And two, even the management commentary in the prior quarter in October, they had indicated that this quarter the margins, they had indicated or hinted that the margins would be flat. So this margin improvement of 115 basis points has come in as a bit of a surprise. But you know what's going to take away the sheen is the Q3 is the next quarter's guidance. Now, the company has indicated that in Q4, they're likely to see a growth of minus 0.6% to 1% sequentially. Minus 0.6 to 1%, right? This is lower than consensus expectations of 0 to 2%. Also, for the first time, they've indicated that the full year growth number is going to be between 11.5% to 12%. This will also be lower than what peers are likely to report. If you remember, for Infosys, the growth numbers are seen much higher, more than 16%, 16 to 16.5%. And for HCL Tech, FY23 growth is going to be 13.5 to 14%. So in that context, Wipro is going to underperform its peers for the full year. Where Wipro has done well this time are the deal wins. Now, the total large deal wins have crossed $1 billion. This compares with a little more than $700 million in the prior quarter. So quarter-on-quarter jump is there, and year-on-year it's up 69%. Now, earlier Wipro would only report the large deal wins. This is the first time the company is also reporting the total deal wins, which basically means that they're reporting the smaller deal wins, the small size deal wins, plus the renewals. So the company has said that the total order book or the deal wins will stand at $4.3 billion, which is a record, and it's up 26% on a year-on-year basis. So from the key numbers that we track, it's Q3 revenue miss, Q4 guidance is muted, lower than expectations. But on the flip side, the deal wins are strong, and two, Q3 margins are better than street expectations. So both these two kind of balance each other's out. In terms of the employee metrics, attrition has moderated for the company for the fourth consecutive quarter. It now stands at 21.3%, and the employee headcount has also declined on a sequential basis. Their employee headcount is lower by 435. But on the whole, I would suspect the street would be disappointed by the Q3 miss and the Q4 guidance, even though the margins are positive and the deal wins are steady. Back to you.
All right. Thank you, Reema, for that. So that was a quick update